Hey everybody, welcome to January 22nd, 2026 Principal Profit Trader Coaching Call. We're in a tricky spot, so let's get into it. So we just want to point out that just because price went down to an area that was similar to this time, just note that like when we did have this nice double bottom and it bounced and we had a clear break, like that's a clear balanced breakout pattern, right? We clearly broke these highs, right, on a strong candle way above it, right? When we were up here and I was warning people to sell, right? We had this huge high volume node that built structure since we broke it the last time. And on top of it, it wasn't just like this clean break when we came up to even test it, which was smaller in nature anyway last time. It was basically like this rising wedge pattern, right? And it wasn't a clear balanced breakout pattern. And I pointed that out when it was right up here. And rising wedge patterns tend to revisit the bottom of balance. And even worse, if you just look at that pattern in isolation, it tends to then break down out of the balance, right? And this bearish candlestick engulfing pattern, right? That means the next day we're not just going to like have a huge green day. That's why every time it came up to this moving average acting as resistance to 50 again, right? And also using the smaller time frame market structure, right? I was shorting that area, right? Anticipating that we at least would retest the bottom of the trend line, maybe even break it down if we hold a few runners in. But because we went from one end of the balance all the way to the other, you can get caught up on a tricky spot here. Because on the one hand, it's at the bottom of this, and on the other hand, the way it got down there is bearish, and it's also this potential rising wedge, bigger picture pattern that we're dealing with. You notice the high volume node here is bigger than the one that we're at. So eventually, maybe after a few bounces, it will reverse itself. But we have to just see how price plays out there. It might not just go up or down right away. It might go sideways like this for a while, right? That's probably what it'll do because most people are kind of undecided as to what Bitcoin is doing right now. We're in a very, you have to think about risk reward right now because that's kind of the area that we're at where if we do fail here, we're in for a bear market. I mean, it's if you just look at this pattern, it's not just in 2022. Many times in its life, 2018 here, same pattern here in 2018. A couple of those times, you can see the one in 2018. We did go up and break the median line, which would be equivalent to hitting the 200 moving average on the daily chart, the purple one that I always use. And the COVID is the time that we did break it, but we still did break the bottom of the support, right? And we had a quick recovery because of the anomalous events that were COVID, like the uncanny money printing due to the lie of COVID. And there was a lot of people at home that had more money back then, so they were buying cryptocurrencies. And that was in 2020. Then they recovered. 21, right? November pops back up, right? This is where we're at. Breaks up the median line again and goes down, right? And then a huge bear market where, I mean, not only is it a correction of a serious magnitude and price, like we're talking what would be like from 45,000 down to 15. I mean, that's a huge crash, right? And you have that, and you have the time factor of like how long it takes. It took like well over a year for it to even come back up to break even. Let's see, that's March 2022. And then this would be, yeah, I mean, that's over a year. So that's not what you want, right? We don't want to be waiting a year and a half for a market to recover. And now we're in a situation where it got so like, I mean, I'm not going to like keep holding just because it might pop up a little higher and hit the 200. At that point, I'm reducing risk here. But right now, we're at a spot where we're at the bottom, right? This could go up, and then we get that relief rally up into a higher level, and then it could go back. You never know. I mean, I don't know what's going to happen. I'm just looking at every time we've had a pattern like this in the past, it's called the tops for a long time. Pattern like this in the past, called the tops for a long time. Um, pattern like in this in the past, called the tops for a long time. There's an anomaly. Okay, so just going back to 2018, 3 out of 4 times, this has been a bear market called the tops. Now, let's see if we can go back a little farther out. 2022. There's the anomaly for COVID. There's the 2018 one. Let's see what else we got. I guess I don't. Yeah, that would be. Huh. Well, I'd like to get it. Man, wow. It was really cheap back then, huh? uh, yeah, we're not getting that, but you can just see, like, just in its history, this is a serious spot. It's not a spot to take lightly. 2018, 2020, it did right when we penetrated this, held, revisit to the top, break down, bear market, long recovery, short recovery, but still, like, a crazy drop in price. And this was the only one that had the quick recovery, but it still had the price drop. So here we go. Keep in mind, like, this area has held as support the entire bull market until now. And then it built price acceptance below this line, price acceptance, and then breakdown, breakdown. So that's the potential possibility. Also, another reason I sold when this came up, they're not playing any games about an overshoot, or maybe it'll go higher or whatever, or maybe I would be wrong. I don't care. The point, look at this, right? Inverse zero line on the weekly here. Very important for, how this week's going to play out. Now, if you have a daily chart for the next day, always look at the 2 day. If you have a weekly chart, you can always zoom out on the weekly. If you have a monthly chart, you can look at the bi-monthly, because you just want to think in terms of multiple time frames, right? On this one, the 2 week one, right? If the and I could show this on a weekly chart, which I will now. This 100 SMA, it really needs to hold here. I mean, it's held this entire, you know, sideways market after the down market. So this balance is going to it's going to end in a trend. That much we do know. Whether it's an uptrend or a downtrend or an expansion of the range up here, and then we get another downtrend, we don't know. I just think right now, based on the market structure, a lower odds event is it to look like this one and just go up, and then we break through this. I would like it to happen, and then we go up here and we go up here, and then we get a new all-time high. I think what could happen, like if we just look at the time cycle here, this is um, right May of this year, right? Why can't we get a bear market until then and a little recovery then, right? So we could, if this breaks, right, that means the like, even if it breaks to like a good level, just keep in mind, like, you probably won't get a COVID V recovery. You'll be holding it back like that for probably, based on this chart and how well it's worked, this level. I mean, this, it even called here in the channel, right? I may not have executed on it well, but I called it very well. But I said if we're anywhere near the all-time highs at this inflection point, then I'm selling, because it's going to be most likely a double top or something, or top building, right? That happened, and that was just months ahead of time. You can plan this, just visualize doing it, right? I mean, you could even see this one here. This is held a support, broke, now resistance. Now we came back up into it, the 21, and this is the 100. 100 has to hold here. If it doesn't hold, then we have a bounce breakdown pattern, and it's in alignment with this rising wedge, which is, if it is a rising wedge, it's a bearish pattern. And, there still is this inverse zero line reject, which even looks stronger on the 2 week. Well, it actually looks really strong on this chart entitled Education. Really strong. I mean, that was one of the reasons I was selling at this meridian line. Because, like, this meridian line has held, and this top line here, the deviation away from it, has held to support the entire bull market. And it's been a crazy bull market. I mean, we're talking, when this flashed green here, I mean, we were telling people to buy at 15,000 in, yeah, January 10th. was the signal. Yeah, we basically told people to buy right before it broke out here. And it was based on that time cycle thing. And we had a bull market. We have a bull market. This was a great bull. This was a bigger run than we've gotten in Bitcoin and other, given that it's higher in price, this is visually a bigger run up. And now we're at potentially the tops, right? Potentially, right? Double top, broke through the meridian line, popped back up to it, built structure, broke down, spent time below support, right? And okay, here's the anomaly, but that's in alignment with a bear market. This one isn't. This one is in 2022. This one is in alignment. And, it's not just a price that goes from around 50,000 down to 15. I mean, that is a substantial life-changing drop in opportunity cost to buy at those levels and the profits that you didn't get. Don't be a guy that's holding this because you didn't sell anywhere up here. You're thinking you're going to get a triple top. We're lucky we got this, to be honest with you. That's why I went all out right at that level. And now we're at something that is, in my opinion, right, multiple leg counts up, extended. It got a pretty good run from like 15 up to 130. I mean, it really recovered. And now, I mean, it's super due for a correction. Timing of where we are post halving, everyone's just in disbelief because we didn't get what they had in their belief system of what an alt season should be. Well, Donald Trump bait and switched everybody. Let's be honest. He said he's going to turn this into the Bitcoin and crypto. Remember, they always use the and crypto. They've never made it seem like this was a Bitcoin centric administration and that everything else is going to get phased out. They always, even in their written language, they always say and crypto. And what they've done is they've destroyed the retail group by doing that. So they bait and switched on everybody. They included it. And now we're not gonna, in my opinion, right now, it's very risky to assume that this will recover and a bull market will, ensue. His tariffs aren't helping either, right? But like 3 out of 4 times, so based on the data and the history of this chart, it has worked out for a bear market. We would need some type of COVID level um, anomalous reason to start reversing the tightening and the contraction. They would need to print everybody into extremely high prices, which we already are. And it would make everything worse for everybody else in terms of if you're a Bitcoin crypto back holder, it would possibly inflate your own personal bags. And if you're savvy enough to take profits, maybe you'll accelerate your wealth faster than inflation, but everyone else will be worse off. So I'm not necessarily, I have to be in a state where I'm not rooting for anything, but just objectively seeing the market through the lens of the system here because it's pretty much all you got in terms of what you can trust. Because I mean, a lot of cryptos are already blowing up. Remember KDA that had allegedly some kind of thriving ecosystem that's gone, rugged. LTO, one of the most shilled coins I've ever seen. Any partnerships claimed anywhere from Heineken to Wall Street, Goldman Sachs to governments, IBM, and the United Nations. I mean, it sounds like a Nigerian scam, to be honest with you. It's that level of shilling. But luckily for me, I've already contacted a lawyer who's won a lawsuit against Rick Schmitz from disgruntled employees. So, I'm not about throwing good money after bad, but I'm just trying to illustrate here by letting you know about these complaints and suits that I'm in. I mean, there is somebody in my group that I started that's going to go to the FBI over here because even though it's a Dutch coin and project, they were listed on Binance and so on, and that's an American company, as well as a couple of other American, like Gatio or whatever. That's not those two coins that I personally own that have blown up. I've have others that have blown up, and I wish I just spent $100 on them, but they're not. There's they've another one that's blown up is I don't even have it on here. I think it was called EQX. I put 5Gs on that. It's gone. It's crazy that they were able to do this they came in and it seemed like there was going to be this transition to all these other spaces, decentralization themes throughout, and sort of heroes that were anti-money into these projects. But what they allowed for is just a rampant criminality without any what they think could be accountability. Because I mean, Netherlands isn't a big country, but I mean, the law. I basically pitched it to the lawyer because I don't want to pay. The last time I was in a lawsuit was 2014, and the hourly then, which was a relatively cheaper rate compared to the first lawyer I had, which was 350 an hour. I got this guy for 250. The amount the only people that win in a lawsuit are the lawyers. Okay, and I did win though, but I mean, they obviously really won. Um, Breaking even doesn't feel good. I want to win when like Starbucks spills coffee on me and I get a $10 million check. Okay. Um, a lot of cryptos are blowing up now. So I think after a firestorm, if the scenario of the bear market does happen, only the best projects that have any kind of utility are going to be around. The ones that still have real partnerships. I mean, even Theta now has some disgruntled employees bringing a lawsuit against it. So everything's coming to light. You know, what they are calling a partnership. What is that? Is that a handshake behind closed doors? Is that apparently this guy actually did have, he's very connected and powerful. That's why out of 12,000 people in that channel, I'm the one that started everything. Why? Are they scared of this guy? And I was talking to the Dutch lawyer about it. I said, is this guy like a super celebrity over there? Because people saying he's related to the royalty over there. He's on his yachts with Conor McGregor on his social media, no doubt using LTO investor funds, for his meals and entertainment. So yeah, it just makes you wonder, right? Like what's so I mean, I guess the good side of the fire that'll burn a lot of these out is that like some of them will do well, right? Because I mean, is rocket science to say like maybe just the ones with a lot of venture capital backings that might have some kind of connections to traditional assets? But you never know. I mean, Cass used to be talked about like it was something really special, and even that was even considered a rug pull at some point. So it's like, well, you can't trust anything. These are coins that I've invested in, unfortunately, quite a lot of Injective, Cass, all destroyed. Polkadot as well. I mean, look at Polkadot was at $55. I mean, it's an absolute joke. Um, People are talking about a cup and handle on this one. This one might do well, I guess, if you could pick the one that is going to be the one that it's like a .com thing. Like, you know, someone was showing me this coin because it's connected to 100 stocks that they're going to be tokenizing or so on, allowing for more blockchain capital. The people that actually use crypto can't even afford to buy eggs. Like boomers buy coins, they don't go on and buy crypto to do it. But so that's another thing I'm thinking about. But I mean, before it was Ondo that was supposed to do that. Now it's this CCU. Like I'm not going to get swayed by that level of pitching anymore because like I don't have the skill set or the time to research this shit. And even if I did, whatever, I don't know which one's going to win out or if it's even a big enough market where there could be multiple winners. But I mean, I think we're just seeing a .com destruction here. I think people are in disbelief because it was the energy of the last cryptocurrency bull run in 2020 morphed into an altcoin that was riddled with scams and tokenizing NFTs, whatever those, you know what I mean? Like nothing. And that's what they did with billions of capital. It makes you wonder. And it's just like, I don't know. I don't know. I don't know. That's the thing. That's the energy that most people can't be okay with being in is I don't know because there's just not a lot of odds lining up that's overwhelmingly in one way right now. I mean, even this at the support zone, I mean, it could hold, right? It's nerve wracking. I want to see, I would like, I hate to say this, but I would like it to, for my own, because I understand how to short it. I want to buy back. I would like it to officially break down and just have the flush out because if I'm just objectively looking at this, I'm not excited about a recovery here. and going long, like as I would have been here, right? This one was different. The context was different, right? We had the first breakout, right? And then it was making a double bottom and it couldn't even get to the meridian line. It was that shallow of a pullback. So this was like a pullback double bottom with a hook from extreme in the context of a still bull market, right? In April, right? But now look at this, right? Higher high, we have a huge divergence here, multiple. Then rather quickly on the weekly chart, it doesn't even hold like weak and make a little pause week or have a bounce. It breaks really quickly. And then it doesn't bounce or recover. It spends time. That's price acceptance, price acceptance, price acceptance, price acceptance. I mean, this one didn't even need as much price acceptance of a. I mean, this is significant of a balance because it's balancing like one, two, three. Like, anything a week is for a balance breakdown. 3.5 weeks probably if you look at the lows of this one. This balance is what I'm trying to say is comparatively, this balance is huge. So whatever does come out of there is going to be massive. And given this inverse zero line reject, I think the odds are for the Bears. As much as that is not news anyone wants to hear, people have, the energy of it. It's hard to see these things. I mean, my system was telling me to sell here. I remember saying a couple times to my executioner because I didn't know how to sell on one of my portfolios. I should be selling right here as I was just taking some off for income. I said I should take the whole thing off. My signal says if you're wrong, it's gonna la la la. Like I don't need to hear that. You know what I'm saying? Like that's the system said to just take off at any of these levels. It was obvious on so many levels. I'm not even just saying that in hindsight. Just the energy didn't feel like I wasn't urgent enough to do it. There was always something else I was thinking about, or only doing it. Doing that level of a trade. And then what you deal with is denial, right? Then you start going along on here. I can't wait till it rebounds. No, you're in denial, right? This chart will very much help you snap out of denial because you can't deny the patterns. I mean, does this, especially this one from 21 to 22, this looks eerily similar because this had a similar price acceptance. This one's even stronger. I mean, this one couldn't even penetrate on the strong move down, right? So you'd expect some action reaction, but then heavy um, heavy price acceptance breakdown. Also, look, inverse zero line actually kind of even like a poor man's hook from extremes because they both snapped over then. This is even more bearish because it can't even get to a hook from extremes because the momentum is so bad. It's called an inverse zero line reject where you can't even get over the turbo line. The CCI can't get over the turbo line. I'm sorry, the CCI can't get over the zero line, but the turbo overshoots. Right here, they both did, but it couldn't even get to the 200. It's still weak, but what I'm trying to say is like this one's even more weaker. That's why I said it as it was popping up to it, not just in hindsight. You can see how this system is a kaleidoscope when you see all these different parts working together. It's not just that this was there, it's where it was in the context of breaking down the top, where the meridian line was, and so on. And then the beauty principle of how it behaved there in the past. Then you're stacking edges. And now you're at a spot where, yeah, it could bounce around a little here, but I mean, I wouldn't get cute here. I mean, I would say a scenario that could happen for the Bulls that just be aware of it is if things do start to get bullish here because we're at the bottom of this trend line, right? And then we start to trend up here. We're going to come up to this moving average. I think let's just zoom out a bit. You'll see it here better on the 2-day. Okay. So we're going to come up into this. Like we already came up into this. So what are we coming up into up here? You could see this pattern on the daily, but there was more false patterns or whatever. I'll show you that if you go back in time. I'll show you this. So this is also sort of in alignment with that other chart I just showed you under education with the meridian line channel. But since this bull run, let's just say right here, really taking off in 2023, the early part of it here, January, when we gave the signal here at 15, right? From this high volume, we've had a crazy bull run. And notice that the legs are getting bigger. Like you're actually seeing more strength on the eighth leg count up, if we count how many leg counts this is it's just like 7 to 8, right? We know it's overextended just visually, and it's a triple topping. So when you start to see these launching points on the bigger candlesticks both ways towards the end of a move, the higher leg count, that's a sign of exhaustion. You want to see bigger candles towards the start of the trend. These are really small, right? And then it really picks up here. That's almost a reversal. But just this is interesting for the pretty much the entirety of the bull run. This 200 moving average acted as support, right? And also, it made sense to get really bullish when, right? I mean, this is when we gave the signal. Corby gave the time cycle in November of that year. Here, letting you know that by January 10th, I mean, it was pretty much the most on point signal I've ever. It was so on the money from time and price level. But what I'm trying to say is that if you wanted a confirmation of a trend and didn't buy then, you'd wait for the technically golden cross, which is when the 50 crosses the 200, right? This blue is the 50. It crossed them just to double check that we're on the 50. Yeah. When the 50 crosses above the 200, a lot of traders out there follow that. It's called a golden cross. You want to do it like on a weekly, 2 day. You'll see it on the daily, but there'll be more false ones. But this one held for the entirety of the bull run, right? And certain aspects of the 50 was traded around, but you could see that it did act as support, then as resistance, then coming up right into it. So when the 50, the fast one crosses above the slow one, the 200, that's a golden cross, and that's a bullish indicator. That's the indication of a trend. Unfortunately, and it's also in the also proper bearish context because of our 8 leg counts up. There was a triple top. I showed you the meridian line. Now we have something that we're popped up into called the opposite of the golden cross. That's called a death cross. And that's when the 200, the slow one, crosses back above the fast one, which is the 50. And just look at the beauty principle of that. We just haven't had that happen in 3 years, right? And on top of it, we didn't even get to the 200 really to test it. And we have directional and horizontal support when those, right? Because, a moving average is directional support. If it's flattening out, you're just trading around it and it's no longer useful, right? So when you have directional support and horizontal support, I mean, I kept talking about this high volume node. I mean, I'm like, dude, we can't, if we break through that, we got a bull run, like on first test. Like that would be crazy strength if we really broke through it. And I even had to remind myself even to be calm because like this 200 up here still needs to be taken out. We would have to break above that on insane momentum and strength and then like build structure above it, which is a scenario that's possible. We have to be nimble in your thinking. I just think it's unfortunately the lowest odds scenario. Even if we get a rally and we break above it, this is still a death cross that could hold at this 200. So that's kind of, if we go back to 2022, when we saw that, that's what happened, right? We remember on the Meridian channel, it showed it was an overshoot of the Meridian. Here, it basically overshoots to the 200. Everyone thinks we're in a balanced breakout. Look, last time we did this, we broke out. We're up. And it's a dead cat bounce. Because the double top is in. I mean, this time, right? It's a different context than coming up this. When we break out of this time, it has this to deal with, but there's no double top. Now there's two wide, huge double tops. So this bounce breakout pattern is different than this time. Also, it shows that we're like, as long as we're still above the 200, touching here was a great entry. That's basically the intermediate term bearish downtrend now getting neutralized by the bigger picture bullish bias at that point. But now that we went sideways for that long, right? You went from an up market in time, then you went to a sideways market in time, then you had a super wide double top with obviously micro double tops and triple tops in between. But like I'm talking about this swing high and that swing high. That's super wide. We're talking 21 to November from April, multiple months, like super wide. The wider the double top, the, the greater the odds that it holds. And also, right, so that was, but this time we broke through it, and now we were coming up into something that now, right, for the first time, like same thing, it held for the entirety of this bull run, except this time when it did it after the made the two double top, broke through, popped back up into it, death cross, 200 crosses above the 50. So I think, even if we do get a rally, be prepared to, if you're long again, be prepared to sell again at 101. So we have to be nimble here. Like for me, the reason why I'm not even long yet is because the way that we came down here was just so heavy and ugly. Can't we just chop around? I mean, until we get some type of, like here's the real area, and also every time I imagine us even, like I imagine us not going down again, red, because we're at this now node, which on this time frame is important for a day. If I zoom out, the bigger one is obviously going to be here again. See, that's bigger than but now because just timing it wise, now we're into support again. At the same time, given the bearish candlestick pattern, as we come back up into it, right? There's also this 20 moving average that's acted now as resistance. It's acted as resistance quite a bit on the time frame that's relevant right now, which is a time frame of a downtrend since October 30th. So that's definitely a time frame that we just popped back up into, represented by this 50 moving average. There was also a hook from extremes, and we made a higher high, but we made a bearish divergence because we didn't we actually had the same level as this lower price level when we're making a double divergence hook from extreme. So it was right at the 200 level. So that was also a sell. And also, it got to a magical number. It got to pretty close to 100,000. Never be greedy. When you're around a level, ask yourself even with your runners, right? Don't just think like everything has to keep running. If the market is going to be a two-directional market, you're leaving a lot on the table. Let things run and stack edges if you think it can be directional, right? So I'm not saying within the same day you might have a larger target, but it's like a lot of the days lately have been very two-sided. We've been in a two-sided market um, since November 21st. So this is a significant time frame. This is a bounce. So this candlestick pattern coming down this heavy, even though we were at support, would probably just one lower the odds for another downtrend day because one we had a trend day and it's lower odds to get two trend days in a row, and we were at support. But at the same time, we were just going to reverse this bearish candlestick pattern when we had this moving average at resistance. No, so this is the exact day that I imagined right now, like a day that's going sideways on a lower range, back and forth. Um, Now I did take an open drive down setup because I got out of the double top setup last night, the top building, and there was actually a selling tail right at 8:30 that I was like a little late for, but I should have just jumped in because it was close enough. It was way better than trying to get a momentum breakdown. But at the time I took it, right, that 9:30 a.m. Eastern Standard Time when all the markets open physically in the United States does have an increase in volume across a lot of markets. And the relative volume at the time, even though it's stabled off and now it is pretty weak and average, was above average. I was like, oh man, it's 10:30, it's at 56. I'm like, this is going to be well over 100 by 7. And look how it's tapered down. So, but at the time, right, I said when Bitcoin was looking weak, that's when I went short, right on that breakdown. Is it it's called an open drive down. Do I take it a lot? No. Is it a as classy as a setup that I gave live that I just kind of got out of because it was chopping around and I wanted to go to bed, even though I was like, oh, it's probably just going to eventually work out because it's just going to bounce. The trade location ones, like when you're fading support resistance, you're always going to have higher odds if you can get like confluence rather than just try to fade something because it's at the low extreme of the day on first test. Notice like when it did break down, there was like a range building for like 13 or 14 hours going chop, 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 chop. We could see that. We'll go on the lower time frames and see that behavior. So basically, that was saying to me that okay, we're all balances will end in trends even on this time frame since the markets are fractal in nature, right? When this started going dot 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 dot, right, coming up here, right, it made sense at 10:30 because the day was still young, and I saw the selling tail. This came up into my zone, or actually no, I shorted it right here at the high of the day. But trade location wise, this was still like about 1% or a little bit less than a sprint to get it a few ticks behind my zone, which is still at an edge. Got this move out of it, right? Then it came up here, right? It's a V pattern, so probably wasn't going to resolve itself right away. What did it do? V sideways dip go. But is this a big D where V sideways dip go up is going to be the dominant one? I was still more interested in shorting because we came up into this moving average as resistance, right? And that would have been at least catching this move. Now, I didn't even adjust. It did go into, I did adjust this zone eventually, but yeah, how did this work out? Yeah, this became the new low, but I said this was the original zone that I had in time that touched here and here and way back over here, this low, right? But we kind of traded around it. That was the context. Yeah. So I didn't have a lot of faith in it. So when it broke down, you just, bought it and caught this move here. And then the runner that I shorted here that's still live or whatever, or this one here is I also took that out just to capture the rewards. Cause like, once you get a certain R setback, sometimes it reverts back to the mean. So just capture your R and just know if you're on alert that you're going to have another entry. So part of me was like, oh, I shouldn't have got out of this, and I was a little peeved because it was moving around. But when I got to the screens, I missed this. I got to the screens right here. I was like, just take that. That's a selling. That was a selling tail reversal signal in the context of hitting this zone. That had higher odds. Plus, like the timing of it, right? This has been balancing since 1450, which is 250 the previous day, and that was at 8:30 in the morning. I mean, that's like well over the entire overnight session and half the other day. So not quite half the other day, but at least a good chunk of the last portion of it. So once you see that, once the time is there, this balance is going to resolve itself in a trend. And I was betting on the downside. We were near resistance. You fade the key reference zones on the non-trending days. This is a zone, and then if you're really doing this strategy, it can be articulated as fading key reference zones on non-trending days, and then getting on board the trend with setups like the breakdown setup or a PC setup on the trend days, and then like use a daily call to figure out whether it's going to be a non-trending or a trend. And you just had different names for them: sideways, sideways up, different variations of them that I've noticed that I've also listed. This is basically a sideways day. They kind of broke down to one side, and maybe the bears will be slightly in control if we close near these lows, which I would call like a normal variation day to the downside or whatever. But I mean, you know, this held, this held. So if I had an open mind after getting out of this one, I would have been more alert to catch this, and then I would have been okay getting that rather than So always just know there's always going to be another chance. I mean, there just has to be. It's just infinite. You don't know. You're just always planning ahead of what you think. You know, the next chance could be like right now. I'm kind of uncertain. Yeah, we're at support now that you get some relief, but because of the way we got down there, such a strong reversal back into balance, I'm I'm just not convinced yet that anything like I'm not even convinced that we're done yet for a relief rally up to the 200, which would take us up to like 100,000, where there's this low volume node and the death cross on the 200. I'm telling you, this death cross is like that meridian channel confluence. It's a pattern that's held the entire bull run, and now we broke through it in a very vicious way. That 3 out of the last 4 times when we did that marked the tops, where we had a 70 to 80% decline in a bear market for over 500 days. It's definitely an area you don't want to fuck around on because like a risk reward rise, the risk is way higher. So even though you might be stacking up all these odds, like oh we're at support or what happened last time, or maybe it'll be an anomaly. You don't you? I mean, anything can happen. But I just remember a lot of the narratives last time. Um, like around this area in 2022 was like, oh, the cycle's different this time, right? And then we're in a bear market. Like that's been said a lot. I feel like and Kathy Woods and a lot of these people going on the news saying that the bottom's in and all this. I mean, these big hedge fund managers have been wrong in trying to shill their bags now to retail because they're already in or something like this. Now, remember, it's like so. Even though we're betting on a repeatable pattern where 3 out of 4 times it's happened bearish, the hardest part is being like, well, it wasn't 4 out of 4. And remember, the first principle is like anything can happen. So like remember, if the context changes, it changes. Like for example, if tomorrow I wake up and for some reason somebody does a giant buy order, right, and it has a candlestick that looks like this, like a huge one that now broke us above the death cross. Like, what if we wake up and it's like at 103, not into it with a tail or a couple of days that took to get into like rising in agony, but like a launching point that's really great, like this one. And if it broke above the death cross, then I'm okay with shifting my bias now because I have new information. That's what these beginners that are learning this or people that have even been doing it for a while, like, oh, he's always changing his mind. Like, well, I'm changing my mind with reasonings ahead of time, not in hindsight. You'll still see the shift. Because if that did happen, then I'm going to be sideways up. So I'll be going long now, even though I wasn't long right now because I didn't have that information 100%. Now, pure support and resistance trendline traders, it's okay that you went long here. I mean, I almost went long today, but I just don't need the excitement of trying to be the first when we had like, let's not kid ourselves. Yesterday, which was January 19th, was a pretty strong dump. And look, we had a similar dump like this here, right? And we had an overshoot where we had like, I want to see a tail like this, then maybe I'll go on. Like that's how crazy it is. Here there wasn't a tail, but you had that moving average. This is like a bull bear area where you're like, wow, this held every time. You're like thinking, I don't know if it's going to hold this time. It's held every time since. But if I'm right, I'm going to get a huge reward. I mean, look at the reward you got on that. That's how you have to think of expectancy, right? At areas of inflection. And this obviously is a huge multiple time frame one. This area of inflection was a smaller time frame idea, right? Because it's, we V'd up into it. It's just a zone that I can see maybe, this much in time. And then on the daily, there's a moving average, which, obviously I'm going down a time frame. So you have to think about then that influences how long you hold it on that time frame because it's a lower time frame idea. Never get out of a trade on a different time frame than the logic that you used to get into it. Like don't get out of a trade that you took on the weekly because you saw something on the 15 or the hourly or the 5 minute that scared you because you got into it on the weekly. So, and this is exactly what I thought would be happening right now. It would just be a really crazy day in between this moving average. We popped back up into the trend line, so it's holding. This is a high volume node that was at least important for the last month, right? But it still is overall smaller than this high volume node that we launched down from, which you'll see once we populate here. But at the same time, you don't just break through. Everything it has thrusts and corrections. This is when things can get two-sided. But when you had the strength of this bearish golfing and candlestick pattern from a strong zone that could be short-term exhausted into decent support here that's pretty damn strong in and of itself, just not as strong as that one. But now it's back up into the context of the candlestick pattern and this 50 MA that's acted as a flip of resistance now. So, and I've actually weighed this CCI a little bit less right now. You can see here how it just would go sideways for a while, kind of like a cup, kind of like a handle. That was sort of the cup and handle call I called. Maybe we'll get something like that. I don't know. We're just at a spot that if anyone decides to get crazy bearish and sells, the context is going to change really quick for bears. But if it holds on the trend line and this range expands, we might get a rally up to this 200. Okay to trade these with a stop loss. Bad spot to be in for a portfolio. Like, if I put on a portfolio risk, I might wake up and have a huge candlestick down to here now in the morning, and then I have to get out because you can't use stop losses on ledger. And that's like a position trading that, right? So I would say you could day trade it, shorter time frame stuff, or even like right now, I don't have a lot of I don't have a good feel. Like, I wouldn't be surprised, right? Every time we build structure below here, we're trying to break this to have a rally up. But what does this zone represent, right? Well, it represents the top of this balance, right? Which is a couple of weeks, which we broke from, held around it, and then launched again. When we easily broke it, now we're popping up into that previous support that's now resistance. It's then breaking us through into this was even a little bit stronger than that one, this high volume node here. So we're like basically going to be sandwiched in between these two. This one here is just today's low, so it doesn't even really represent anything too important. Back here, a push here, and maybe that thing and that, but that's it. So yeah, I mean, I'm telling you, when your bias shifts, I mean, look how easy the shorts have been. Every pullback, we can even go into the hourly so you see it a little better. Every, fading every high of day, the short-term bias of bearishness would take over. Um, Even if you don't have perfect trade location, like you didn't wait to this zone, but you saw this on the hourly, this inverse zero line reject, and because I mean, to go in a little bit early if you had a strong inclination isn't going to cost you that much because these ranges are tight anyway. But then when they break, like look how tight these ranges were, but then you get a nice move out of it. So I think we'll just maybe bounce around here for a bit. It'll go sideways. Um, we would need to see some type of maybe action reaction to see if we can get a relief rally. But even if we do, just keep on guard. That if we do, and you have big positions on this next area of problem is inside this death cross. So like you should be taking profits at like 101,000. The fact that we got to 98,000, like $3,000 of risk of reward, wasn't worth the risk that I was envisioning when we popped up into this, which would be at the very least breaking back up into this trend line, which it did. It's bigger. So that's how you can look at visually reward to risk and just say, okay, well, if my reward to risk is inverted, then I don't have a positive expectancy. See, most people really just ask themselves, is this trade going to work out? Is this going to reverse? Is this going to not? But a better thing would be like basically saying, is this going to work out enough of the time to make me money in the long run? And does it have a positive reward to risk ratio? Getting an extra 3,000 to go from 98 down to potentially what got as low as what, 87, almost 10,000. No, I'm not going to do that. But now that we're here, it's not so much sideways down anymore, but maybe some responsive buying because market has moved too fast too soon. Um, and even on the 2 day now, possibly building if it wasn't if it was a little bit more at the zero line. If we look at the daily, nothing, just kind of needing to build structure here. We're not getting any kind of overshoot and snap back up here. So yeah, this is not what we wanted. When I mean, if you're only looking here and you saw this, you would say, "Oh, this is definitely a balanced breakout pattern." But it has to be really um, substantial of a breakout. And this one actually wasn't a balance so much as a rising wedge. A balance implies that you have, you know, horizontal for the most part, what you're looking at, support and resistance. So how I was looking at it here is that, one and two, like this, there really wasn't a trend line here because this double top here and the way that this kind of closed that day was almost the top of that balance. And we didn't just get like a mediocre thing. This thing was huge. So I'm sideways up now, and it still had room to go up into this, which, like I said, was smaller back then. And this was, like I said, that rising wedge, not looking good because the rising wedge in isolation predicts this. Remember, when you see a bigger picture pattern, they're not doing like a top-down contextual analysis on it. They're not measuring, you know, what we went down into here, but what's the nature of what we went down into? They're just showing it the pattern. So that's why it's just one holistic thing. So I would say we're at a spot where be on guard. If we do get a bullish rally, don't think that we're in the clear yet. We could have a serious problem up at 104,000 where that death cross is. And like I said, we'll also keep an eye on the RSI to see how it closes this week. And yeah, I would say be on guard. Don't get faked out because you think this didn't behave the way you wanted it to, and be okay with changing your opinion if we get new information that contradicts it. So that's that, guys. Thanks for coming out, and I'll see you guys in the room. Take care.